Good morning. You're listening to Insurance Matchmaking, your path to health, life, and Medicare coverage with Matt Libby Insurance. And now, sharing his knowledge, here's your host, Matt Libby.
Welcome back to Insurance Matchmaking. I'm going to touch on a little bit of stuff I covered last week, and I totally forgot to mention that I was having a couple of my Welcome to Medicare workshops. So when this airs, it's going to be after they've happened. I've already had the one at the Cookeville Library, and the Cumberland Business Incubator will also be in the past. Anyway, last week I was talking about maybe looking at the high deductible G and doing the what we call the HIPs, the hospital indemnity plans, and listen to a podcast this weekend. And you've heard me talk about this a couple times on here, that, I'll listen to industry podcasts, get some, sales ideas or better service ideas. And in this one here, of course, yes, it was kind of a sales idea, but also kind of a good service idea, and just hadn't looked at things this way. And that's what's great about some of these podcasts, is I get to see or hear, ways other agents are doing or have done in the past. So the individual I'm listening to has been a field agent like myself. He's now currently working for a carrier, and I'm not sure which carrier he's working for. He changed positions here about a year ago. But he just gives tips on how we can improve our business. And it's like I said, it's not just sales, because one of the things he talked about, and maybe even been on that same show, or one of the ones I just listened to, on the same day, was talking about, the customer. What sets, you apart from others? What sets me apart from another agent? One of the things I always stress on is I'm local. So that sets me apart from people who may just be at an 800 number, but there are other agents that do what I do here in the Upper Cumberland. So the local part, I don't have that advantage on them. They're local also. Some of them maybe have more years experience at it than I do. So I can't say, well, it's all my years of experience. But some of it was just some of that above and beyond customer service that you come to appreciate. It was like, well, I returned my phone calls and I'm honest. And he's like, those are expectations. I mean, we're not, nobody wants to go to somebody, oh, I'll get you a great price, but I'm going to be dishonest about it. Obviously, that's not going to work. But so it really does kind of go back to, okay, what's going to set me apart from other agents? And sometimes it's just a matter of looking out for your entire coverage, whether it's, not just being transactional and go, oh, it's enrollment time. Oh, you like this plan? Okay, let me sign you up and I'll get paid. And that's great when that happens. And so, and I do that sometimes. That sometimes kind of just goes kind of transactional. But I also spend a lot of time sometimes working on issues that are unique, especially in the under 65 market. The Medicare is pretty straightforward. There's not a lot of differences of things that I need to do to help people. It's usually a matter of did you recently lose coverage? Are you turning 65? Or is there a special enrollment that'll help you get, better coverage? So those are some things that I can do to help out. But the one that this guy's name's Mike. Mike was talking about was on the HIPs, the hospital indemnity plans. And a lot of agents don't write them at all. Now, I typically write them more with a Medicare Advantage and a Medicare Supplement, but they can go with the Medicare Supplement, especially if we look at like the high deductible G plan that I mentioned last week. Or, again, they pay regardless of whether your insurance paid or not. So if you get a bill for a certain thing that qualifies, for a claim on that plan, it'll pay the claim. They're not looking to see if your insurance paid or not. In fact, EOBs aren't what you submit for claims. It's the bills. But what he talked about, and it's something, again, I hadn't thought of, was front-loading the hospital indemnity plan. Because one of the things he said was, because there's so many differences between Medicare Advantage plans. This one has a $300 hospital copay. This one has a $250. This one's $375. And so if you try and tailor that hospital indemnity to fit each individual's Medicare Advantage plan, it can get a little time consuming. So a lot of agents will say, I'd rather just get off the phone call and get on to the next one. And so they don't even offer hospital indemnity to their clients. It's a great copay protection. I kind of market it to those that are turning 65 that just really they're on that fence of, do I spend the extra money and get the Medicare supplement plan, even though I hardly ever go to the doctor, but I don't want to have to worry about networks, and if something major happens, I don't want to have to worry about a big expense. And then you have the others. Well, I never go to the doctor. I want a zero premium Medicare Advantage because I'm not going to use it. I want the extra benefit. I always recommend in those cases is look at a hospital indemnity plan and or a cancer plan, because that's where your big expenses will happen with an Advantage, but you can get those for a lot less money than buying a Medicare supplement plan, and the rates don't go up as you get older. So it's real easy to market the hospital indemnity plan to someone with a Medicare Advantage. But the other thing is, things happen when you go in the hospital. It's just you have extra expenses. In fact, actually, I was on a training just recently. I can't say the name of the company yet because it's not released, but it is a well-known company that hasn't had a hospital indemnity plan. It's going to introduce it sometime this year. So my expectation on that is that's going to come about. It'll be available at about the time that we're marketing the Medicare Advantage plans for the annual election period. But one of the neat things that policy is going to have is it's going to have a reimbursement for pet lodging. And you're thinking, what's that got to do with healthcare? And it really doesn't have a lot to do with healthcare, but if you're in the hospital and maybe you live alone and you have your pet, that's your loyal companion. But you need to be able to do something. You don't have somebody handy to go by every day and feed and walk the dog, change the litter box for the cats, feed the birds if you have parrots. And it'll have a $75 per day pet lodging benefit that will coincide with a hospitalization. So that can be really handy. I think it's going to be a neat plan. I'm looking forward to it. But like I said, I don't know when they're going to announce the availability of it, and again, what states it's going to be available in right away. Tennessee sometimes is a little bit slower to adopt new plans than other companies, so we may not have it this fall. It may be next year sometime before I can offer that plan. But anyway, back to the front loading. On the hospital indemnity, there's a couple different ways the plans pay. Some do both, some only do the one, and that is one is the per day. So generally, I've said, so if you're tailoring that plan to fit each individual Medicare Advantage plan, if it's $350 for 4 days, then you would do a 4-day or 5-day. Sometimes your choices are the daily benefit for 3 days, the daily benefit for 6 days, and so you would tailor that plan to fit how many days. Typically, most of the plans, the way I did it, because one of the things that Mike mentioned was take a strategy of designing a plan that fits, one size fits most, not one size fits all, because everybody's different. Some people won't qualify for certain plans for different reasons, but if you can do the one size fits most, and you only have to kind of adapt if somebody that's not fitting them. As I mentioned, I usually would do if the copay was around $300 per day, whether it's 3 days, 5 days, most of them are like 5 days. That's what I would do. Is I'd say, okay, let's do $300 for the 5 days, or maybe 6 days, because like some plans you had to pick 3 or 6, you couldn't pick 5, but you only had to pay copays for the first 5 days. So if you were in the hospital, because once that 5 days hits, then you're not paying anything more for that hospital stay. But if you had the 6-day benefit, then you get paid a little extra. You actually still get paid for that 6th day, even though you didn't have a bill for that day. Well, Mike's strategy of the front loading was, some of them you can pick, 1 day, 2 day, 3 days. One of the things he did was like for 3 days, because you could do $750 a day. So you do $750 a day for 3 days, and even if you're in for 5, it still would cover the copays. So again, you can have a little bit of extra income coming in because, well, maybe you had to take an ambulance to go to the hospital and then got admitted. So you're going to have a hospital copay. Now, a lot of the plans do have, an ambulance rider in the plan. It'll pay, reimburse for an ambulance, or you could just do the $750 per day if that's the only thing you're concerned about is a hospital stay, and you've got a little bit extra then to cover the ambulance you need to be. And of course, after a hospital stay, a lot of times you have physical therapy, just other follow-up doctor visits, and some of those things that you rack up some more copays. And if you had a little bit extra came from the stay in the hospital then you've got that. So that was his idea on the front loading. And then there's also some of the plans have you can just request a lump sum. You can ask for $1,000 per, if you're admitted in the hospital, or $2,500. Now the one thing with the lump sum ones is that's once a year. So if you were admitted in the hospital and had a $1,500 benefit, it would pay you that $1,500 benefit. But say you go in the hospital again 6 months later, you're not going to be able to take that benefit. Now, the per day benefit will happen on multiple admittance in the hospital. So if you're in the hospital, say for 3 days, you're going to get paid the daily for the 3 days. 6 months later, you're in the hospital for 2 days. You're going to get the daily benefit for those 2 days. So you're going to get the daily benefit per time you're in the hospital, but it's limited to how many days you pick. And even the ones that have the lump sum, they usually have a daily benefit. So usually what would happen there is you just select the lowest daily rate. And that way you're mostly paying for that lump sum. And so sometimes doing that front loading and just having that benefit and figure that will cover some of the other things, you can actually keep the price down a little bit on your plan, because it's only going to pay if you're admitted in the hospital. So if you decide, well, if I go to the hospital, I'm probably going to be in an ambulance, I'll just go cash in on that. Well, what happens if you take an ambulance to the emergency room and you don't get admitted to the hospital and get sent back home? You're going to have that that ambulance copay, but you don't have anything coming to help you reimburse that. So those are some options to look at, and that's why the one size fits most is the best approach. And of course, we can a la carte. That's the way the plans work. They're kind of an a la carte. You can pick, you want so much of a reimbursement for a surgery, so much for an ambulance, so much for the emergency room, so much for a diagnostic test like an MRI. So there's some, we can always add on. One of my lines is, I work on commission, so far be it from me to tell you that you don't need more insurance. And I don't try to, just fill the thing up with as much, premium as I can, because the premium can become unbearable and you cancel the insurance. And if you haven't had it for very long, I get a chargeback on that commission. So I don't want to have you be overcharged. So that was one of the things I actually went a little longer on that part about the front loading the HIP. But we're going to take our break, and we'll be right back, and I've got some more Medicare things to talk about.
Twin Lakes is celebrating their customers big this summer with their 10 gig days of summer. Visit them online at twinlakes.net/summer2025 to register. All entries will be accepted until July 16th, and the grand prize winner will be announced on July 17th. To boost your chances of winning, enter every 24 hours. More entries mean more chances to win big. Stay updated by following them on Facebook, where all the winners will be announced. Don't miss out on the fun. Learn more at twinlakes.net. Got items you no longer need? Give them a new life at the Restore Donation Pop-Up Event. Saturday, June 14th from 10 a.m. to 12 p.m. at First National Bank in Sparta. Drop off your gently used items and support a great cause. Their donation truck will be there ready to go to receive your donations. And guess what? They'll be back every second Saturday of the month, so don't miss an opportunity to declutter and make a difference. June 14th, 10 until 2 at the First National Bank in Sparta with the Restore Donation Pop-Up Event.
And now, back to Insurance Matchmaking with Matt Libby Insurance.
All right, and we're back. And I was talking about the front loading of the hips before the break. One of the other things that I've been meaning to do, like little short YouTubes. I just got to take the time, sit down, and have my slides that I want to show and do, and some explanations about some of the things that may affect you. But one of them is, and it is related to the hip, is why a Part B Giveback plan may be a good solution for you. It's not for everybody. One of the things that I always try to remind people, if you're at a lower income and you're low enough income, you're either on TennCare or not qualify for TennCare, but qualify to have the state pay that Part B premium for you, you're not going to be able to get those Part B give back. So don't call the 800 number seeing that I want to get the extra 150 back. And there's not a lot of plans that do that. as I've mentioned a lot of times on here, is most of the plans that have a good give back on them are the plans that are geared for really targeting veterans who don't need the Part D drug coverage, and it's just getting it as a backup to the VA, but maybe to get some free dental and to get that money to help pay your Part B premium. It again, for me, it's an easy sale for me to convince someone who has the VA for the drug coverage to get a give back plan. But sometimes it's a good fit for individuals. I used to kind of have a negative thought on it because when they're going to give you something, they're going to take something, so if you're getting that Part B give back, other things on that plan are going to cost more. And some of them just do away with or lower the over-the-counter and dental plans. The other thing they generally will do is, especially the hospital, maybe surgery, copays are going to be higher. The maximum out of pocket on the plan is going to be higher. But if you're in relatively good health, maybe go to the doctor a couple times a year, and your primary doctor, and pretty much every plan out there right now, has no copay for your primary doctor, or if they do, it's like $10. So the give back, you're still going to come out ahead in that regard. The only time it's really going to cost you is if you have some bad health issues. If you end up in the hospital, or God forbid you get cancer and you have all those costs, and that's going to really wreck, and you'll hit that maximum out of pocket. But that's why I always recommend, hey, look at a cancer plan, because you're going to pay 20% co-insurance on your cancer care until you hit that maximum out of pocket. And you also have the hospital indemnity plans that will reimburse for those hospital stays. And that's why I talked like before the break about the front loading. It doesn't matter if you have a $350 per day copay or $475 per day copay. If you're going to get $750 a day for 3 days paid back, you're only going to worry about maybe still not being on a positive cash flow if you're in there for 5 days or more and it's a very high copay, and if you're doing $750 a day for 3 days, and I'm not doing the math, so it still could be you're going to come very close to not having a lot of out-of-pocket expense. And the thing is, you can get a good cancer plan and good cancer coverage and good hospital indemnity coverage, and still have some money going into your check, or you're still clearing each month because you're not paying your full Part B premium. So it still makes sense to look at that. One of the things I wanted to mention, if you're not happy with your Medicare coverage, I don't care if it's, hey, this Part B plan just doesn't seem to be working out, or I don't like my Medicare Advantage, or I just got notice that my Medicare supplement is going up. Don't wait till October to talk about those things. Let's get together this summer. This is usually my slower time of the year. I've got the time to sit down and go over your options with you, and we may be able to get a special enrollment, or even so, kind of plan for the future. So one of the things I wanted to talk about, speaking of the future, was the Part D prescriptions. And that's one of the reasons to look at that. But the other thing on that is the negotiations that CMS is able to do with the drug companies to try to lower some of those premiums. And there's been some great results on that. I saw something on Facebook the other day, and then I couldn't go back and find it on Facebook again, but I was able to go to cms.gov, not medicare.gov, but cms.gov, and look up the link for the prescription negotiations, and found the link that this person had posted a picture of a graphic, and it talked about how a lot of the very expensive drugs that they have renegotiated pricing. Januvia, Fiasp, Farxiga, Enbrel, Jardiance, Stelara, Xarelto, Eliquis, Entresto, and Imbruvica. And I don't know what that one is, but I did a list of the ones that I know are kind of the most common for prescription costs, and I know that a lot of my clients, this is what they run into, and we picked drug plans this year based on that. And I just kind of wanted to touch base on some of those changes. And so I did 5 of the ones that we talk about the most. And I usually talk about Eliquis, but it ended up on the bottom of my list. But Januvia, Farxiga, Jardiance, Xarelto, and Eliquis. All very expensive drugs. The current, and this right now, this is the price for these. So if you're just paying retail for them, this is what they would cost. Januvia, $524, Farxiga, $556, Jardiance, $573, Xarelto, $517, and Eliquis, $521. And I bring up those numbers because especially if you're on a plan that has a high deductible, which currently right now is $590. You got to pay that deductible on some plans before your plan starts paying. So that $500 price, you're going to pay the full price because you haven't met the deductible yet. And then a lot of times those will go to a copay, or sometimes a co-insurance. You could have to pay 25% of the cost until you've hit that $2,000 max out of pocket for your prescriptions. So if you're just figuring, keep the math simple, a 25% cost on a $500 drug is going to be $125. Part of the negotiation, and again, if you're going to have a copay, they're usually $42 to $47, depending on the prescription plan, prescription Part D coverage that you have. But that's typical. I expect that to go up in 2026. I don't know what it can go any other way. One of the things that happened, you've heard me complain about a lot of the plans are not offering us commission anymore because they didn't plan ahead and figure that, this is not a good way for us to pay for the prescriptions. So a lot of the plans had set in copays for Tier 3 and Tier 4, the very expensive drugs, instead of using a percentage, which was the model that was not required but recommended by CMS it is required for the standard plan. But if it's an enhanced plan, the insurance company was allowed to say, no, we're just going to charge a flat copay for those tiered drugs. So, a $40, $45 copay for a $500 drug is way less than 25% of the cost. So they're eating that cost. That, I guess, what I'm getting, and that's one of the reasons why they decided to quit paying commissions, because they underestimated how much it was going to cost them to provide this drug coverage. They're not going to make that mistake for 26, and we're in the period now where they are submitting their bids to CMS saying, this is what we want to charge for a premium. This is our formulary. These drugs are going to be on this tier, and this is going to be our copays or our cost-sharing amounts for those prescriptions for our members. And they have to get that approved by CMS. They may bounce back and forth on the approval, but and of course the deductible for Part D next year is going to be $615. I expect to see probably 90% of Part D drug plans having that deductible. Now, you're still going to have those drug plans that might be 90 to 100 and probably, well, actually, I think there was one that's like, was it 200? No, it's 128, I think. So you're going to see drug plan premiums $90 to $150. Those plans probably won't have a deductible, or if they do, it's going to be a reduced deductible. But a lot of the plans charge the deductible on all tiers, even those real low-cost Tier 1, Tier 2 drugs, you may have to pay the cost of it until you reach the deductible before it's $1 or $5 copay. So those could be a little more, so you could have some more costs. So anyway, just kind of example of these cost negotiations. Januvia, as I mentioned, is currently $524. It was negotiated down to $113. Now, my guess, so it's still going to be subject to the deductibles. It's still going to be Tier 3. And it's probably going to be, a copay then for Tier 3, and it still would be so you're going to pay about 50% of the cost of it as a Tier 3 drug. They could always put these drugs on Tier 4 also. So, so that usually raises how much of the cost that you're going to bear. But you've heard me talk about the Canadian Med Store. So one of the things the Canadian Med Store do, you don't have to worry about meeting the deductible, or maybe you didn't get a drug plan. And it's going to apply to the under 65 market too, if you have a high drug deductible, or the copay for, or again, some of these things aren't covered on certain formularies. You change plans and didn't realize that your drug wasn't covered, or you get prescribed something and you don't have an alternative. You can go to the Canadian Med Store. You don't have to be on Medicare to use the Canadian Med Store. Anybody can use it. And it's not in Canada. It's a company in Florida that actually buys they buy the prescriptions from Canada, but they're shipped directly to you from that Canadian pharmacy. So you get them very quickly. But the Januvia, there is a generic that you can get from Canada, and it's $50 a month. Farxiga, Xarelto, and Eliquis, all of those, you can get those for $50 a month. Jardiance is a little bit higher, but again, on their generic version, it would be $58 a month. You usually get it like a 3-month supply, but I divided it down, but it was a little bit more. It was like $175 instead of $150 for a 3-month supply. But Farxiga, $556, was negotiated down to $178.50. Jardiance, $573, negotiated down to $197. Same with Xarelto, from $517 to $197, and Eliquis $520. So that's going to lower those costs, which is going to lower the cost of the insurance company. So fortunately, they'll pass some of those savings on to you, the member. It's not going to be on everything. There's still going to be drugs that are still sky high. Some of these $20,000 drugs are still going to be $20,000 drugs. That was one of the things I looked on this list. A couple of things I didn't recognize. Stelara, I'm not sure what it is. It's $13,000. It's going to be $4,600. Still very expensive, but that's the Medicare cost for it. So it will lower the costs for the insurance companies. Not necessarily you may not see that as a lower cost to you, but it could keep your premiums down on other things. So anyway, went over a lot today and didn't get to everything I thought I was going to, so I'll probably touch some of this on the next show. But until next week, remember, at Matt Libby Insurance, we can cover you from head to toe. Please go to insurancematchmaking.com and click on the previous show recordings, which will take you to YouTube. Please like and subscribe to those and share those. Help me get the word out so I can help more people. And till then, talk to you next week.
You've been listening to Insurance Matchmaking with Matt Libby, your path to health, life, and Medicare coverage with Matt Libby Insurance.